Hey, welcome back to another episode of Johnscryptotherapy. Today we're going to talk about the Omi token. Really excited to bring in the volume indicators for today. So this is called the volume fixed range. We put it from the top over here towards the bottom and you get this fixed range in the side. On the side you see these volume profile. These are nodes right here. So when you look at this, you can see we have spikes right here and then we have a major spikes there. What does this kind of tell us? It tells us where the huge levels of volume or where the past historical data of volume has played around. So right here you can see this volume profile is bigger than this. And why is that? Because there was more activity around this section. Why is this very important for us? Well, prices tend to move around volume. So once we look at these two volume nodes right here, we highlight it. You could see this as the bottom and you can see this as the top. And why is this important? Well, when price did break towards the downside, we came to a key level of support. If you don't know how to draw in your support and resistance, volume can truly help you to determine where those key levels of support and resistance are. Once price comes back down here, you could look at order blocks, fair value gaps, all of those patterns that you're looking for to buy the market. Don't strictly buy the market just right away, guys. Wait for those confirmations to buy the market. And why is this important? We have key levels of buyers stuck in this range telling us that if we have the right setup, price is tending to go to the next level of volume. Once you look at this volume, look left of structure, you can see that the volume profile is slowly building. That means there's volume slowly coming together. And that's why prices tend to move in the sideways action until one thing happens, until it makes a volume node like this. What am I saying like this? Well, take a look, guys. When you look at this volume node, you can see it's kind of filled. It's kind of filled in every single section of the market. Well, when you look at this node over here, what does it look like? It has two bumps. It goes like this, it goes sideways, then it goes here. So there's a gap in the middle that's not filled. The only way it can be filled, guys, is when prices go sideways for a while. Once price goes sideways for a while, what is this node going to do? It's going to spike and it's going to cover every single section of this volume. Once it does that, we can use this one to target the bottom one as a key idea for us to hold value as sellers. As this becomes resistance, this becomes support, and this is going to be our next major level of taking profits. The only way this can happen, guys, is if prices break below this structure. So let's put it into perspective. If 0.0007884 gets broken, and we do see a body close, so keep that in mind, guys. Once we do see a body close, this is when you can use your strategy, your methodology of trading in towards the downside. You could do two things. You could look for a retest, you're looking for order blocks, your patterns, whatever confirmation you're looking for. But then we're going to target the next volume node. Why? Because this is going to act as resistance for us. So that's where we can put our stops just above the structure and aiming towards the bottom structure. That is one of the key ways of using this node, and it's very powerful. Now, the other way that I want to show you guys is for those that don't really understand how to use this node idea is very simple when you combine both nodes together. So let me show you what I'm talking about by combining nodes here, guys. Okay, so you see how we have a gap here? Right here, we have a gap, but let's say I wanted to use it. So let's say if prices broke towards the downside, and John says you want to look for the nodes to be like this, but let's say it still has a gap. Well, guys, there is a way to secure that gap by looking at the previous structural nodes. So let's say we're looking at this range right here, cover this range all the way to the top here. Once I cover this node here, and I look to the left-hand corner, I can see that the node's going like this. Okay, so work with me here, guys. And let's say in the middle here, there was a big spike, then it came back down. So the node that we're missing here, or the volume profile that we're missing here, we can actually grab from this volume profile right here. If I take this volume profile and I took the tool and let's just say hypothetically, this was the box. I grab that volume. So the box is the volume inside of that. I grab it and I move it here. This volume should follow because I'm grabbing it from the previous historical data and bring it to the relevant data. So if I grab that, this node or this volume will actually jump into this section of the market. And what are we missing here? We're technically missing the spike that we had here. So I'll grab that, I'll bring it in here, and that will cover this, making a full volume node. So that becomes the full volume node. What does that mean? That means we're covered. That means we have strong structures telling us that if prices do break and retests, that's up to you if you guys want to do that, price should fall. Why am I so convinced price should fall? Well, guys, take a look at what price is doing here. Is there any volume here? No, that means there's so much volume here and there's so much volume here. There's nothing in the way to stop us from falling into structure. So that's another way of compounding your nodes. I will be talking about this volume and reducing it and putting it in together in my next video or something like that. I wanted to do like a little course for you guys for free, but overall, I just wanted to tell you guys, if prices do break below this structure of volume profile, we are seeing a decrease in volume. And this is what I'm saying. When you go to the weekly, we have a lot of fair value gaps in between. So there's a high probability price can still go down even if Bitcoin spikes. In order for us to know that we're going towards the upside, we need to see a break above the structure. So if we see a break above 0.0009602, we need to actually look for a profile to target. And as you guys can see, there's really no profile. But of course, if you look left, add your structure of profile with this profile, and there's a higher demand of profile, then guess what? There's another target for us to go to. For now, we're seeing sideways action. We're waiting for a structural break. If you're looking for the daily, this is just sideways action. You could do this on the 15-minute, 30, 1 hour, all these time frames can be used. But for this example, I'm using the daily. We're looking for the simple break below. And I want to see the lower structures being hit. That's what I'm looking for. We'll see how prices play out. But this is a key level or a key way, guys, of using volume to help you find key levels of hidden levels of support and resistance. If you guys do like this video, please make sure to like, share, and subscribe. And remember, this is not financial advice. This is my advice to you guys next time. Take it easy and John out. Peace.